I have something big to tell you. StanChart listed 8 potential scenarios that could shock markets next year. That includes Bitcoin sinking a further 70%. That includes Nasdaq 100 dropping by a further 50%. Federal Reserve could cut interest rates by 200 basis points. I know latest inflation figures look a bit better. StanChart also mentioned that oil could crash to just $40 a barrel. But all this is not a big deal. The biggest deal is I can't find this report yet because I don't see it for myself. What in the world is going on? I thought information is so easy to search nowadays. If you can find it, do leave in comment sections later. Is this a private client report? Is this a casual comment somewhere? It all seems to start from a Bloomberg article on 4th of December. It's mentioned over there that StanChart's bank strategist has mentioned these scenarios. His full name is Eric Robertson. I've even went to his LinkedIn to try to dig an article. Couldn't find it also. And in any case, if you would like to connect with me on LinkedIn, search for me there. I've even went to Bloomberg to see their videos, whether there was actually a commentary or an interview is done. But no, I still can't find it there. Now maybe these dudes, they have some special method, but never mind. I'll be sharing with you the 2 biggest points that matter most to you. The first is on Bitcoin. The second is on Nasdaq 100. I'll list both of these 2 big shockers with a scale of 1 to 10 maybe. 1 being not so crazy and 10 being absolutely crazy. So if you're curious to find out which idea is crazy, continue watching on. Hi guys, welcome back. Without further ado, let's start with the first and biggest headline grabber, which is Eric Robertson from StanChart has mentioned that Bitcoin could drop a further 70%. Now, if you Google search a bit, you realize that most of the crypto websites are pulling this headline for debate to stir viewership. And Bitcoin dropping a further 70% means you'll get to a $5,000 level. My take on that is from a scale of 1 to 10, I think it's 8 upon 10 in terms of being crazy. Now, I didn't put it 10 upon 10 because Warren Buffett thinks Bitcoin is worthless. So maybe my view is just too optimistic. But let's pull on what Mr. Eric Robertson has mentioned. He's mentioned that speculators who believe crypto rout is over could be in for a rude awakening in 2023. He says that Bitcoin's demand could be switched out back to the real thing, which is gold, spurring a rally of possibly 30%. He's mentioned last but not least a decrease in demand of crypto assets and a corresponding decrease in prices simply because of a lack of investor confidence. He stressed that he wasn't making any predictions but giving instead possible future outcomes that are not being considered by the market itself. Right now, in my view, the crypto asset space is extremely bearish already. Fear and pessimism is widespread. It's very easy to find stories of multi-millions being lost, not including FTX. This, for example, is a story of Justin Bieber losing almost all of his 1.3 million invested into Bored Apes NFT. By the way, Justin Bieber has bought his NFT with 500 Ethereum. So the value of it has dropped and Ethereum price has also dropped. That's why that big loss. And back to the point of FTX. Yes, he's the number 2 player. He has collapsed. What if Binance, the number 1 player, has certain problems also? Wouldn't that further damage the industry? That's why just 8% of Americans have a positive view of cryptocurrencies as of right now from a CNBC survey. That is done very recently. Now, my belief is that margin and leverage trading in the crypto system is more or less sucked out already. At this pessimistic phase, I'm not too sure what could injure the sentiment even further from casual investors, because who's remaining left is probably looking super long term. If you look at the previous highs for Bitcoin, that was in 2017 and it plunged to its depths by about 82%. If we apply that to this wave upwards, Bitcoin will still have to settle above $11,000. That's why I'm of the view that crypto asset space is extremely bearish already. The upside, it's probably much better to be a contrarian than not. And if you happen to agree, help me smash the like button so that we can reach a bigger audience together. And let me know your thoughts also in the comment sections below. In my view of things, I think the dust is settling down. Regulation will likely come in. There'll be certain reforming. The industry will definitely need to go through a painful maturing phase, just as e-commerce platform went through during the dot-com bubble crash. With that view, I've actually inched up the amount of Ethereum coins I'm holding. I'm concealing the absolute number. Quite easy to find out if you check out my previous videos, but I don't want to jinx it further. It's quite obviously the worst performing asset in my entire portfolio. But I've actually no concerns that it becomes zero. My biggest concern in my Ethereum coins are in storage. That's why I put it to a cold ledger wallet. And if you're keen, look for links below. Again, crypto assets are not regulated. Make sure it suits your risk appetite and make sure you have also an optimistic view on what could happen once the dust eventually settles. With that out of the way, we move on to the second point, which probably impacts many more of us. This is Eric Robertson's call that Nasdaq 100 could plunge a further 50% as tech companies suffer a wave of bankruptcies, echoing the early 2000 dot-com crash. I'm curious also, why is not the entire Nasdaq, which is about 3,700 stocks, but rather the biggest 100? In any case, the correlation is very high, but coming to the point of ranking this from 1 to 10 in terms of crazy, I'll rate this instead 3 upon 10, which means I don't think it's that crazy at all. Now, if you already own technology, you might find this view very difficult to accept, but hear me explain things a bit. You know, the peak of Nasdaq was 16,500 thereabouts. If it does indeed drop to 5,500, which is what effectively Mr. Eric Robertson is calling, that could be a drop of 66% from top to bottom, correct? How can good companies collapse that much? That is very difficult to imagine. But take note again, what has happened in dot-com bubble crash is that Nasdaq has dropped 74%. Not just that, we've seen a 10-year rally in terms of Nasdaq, which can be shown in this graph over here. Nasdaq Composite is the blue line, Nasdaq 100 is the yellow line. Let's change our discussion a bit more towards Nasdaq because that's more commonly traded, more commonly invested into. Even if we see a 66% drop to 5,500 in terms of level, do you know that this level is still above something that is experienced in 2017 only? And 5,500 is actually still above the previous peak experienced in .com. That is how much Nasdaq has ran up in the last 10 years. That's why there's absolute faith that capitulation will not happen. But if we study history, we realize that in .com crash, sound companies like Microsoft actually saw a 60% decline. Not all companies during dot-com bubble crash were speculative and non-profitable. Microsoft was already milking money and being highly profitable. Very similar to what they are now, just on a small scale. And the blue chip very much like Apple right now. The main point I'm trying to drive is that extreme pessimism can happen. Which means Microsoft trading at less than 200 cannot be ruled out. Apple trading at less than 100 also cannot be ruled out. When price-earnings ratio gets compressed, you realize that price can drop tremendously. That is why Tesla shareholders are getting a rude shock as to why the share price could have cracked $200 and lower. Again, extreme pessimism can happen in bear markets. Now, if you're looking to invest in Nasdaq, I'd like to introduce to you today's sponsor, who is Webull. To invest in Nasdaq, simply buy the ticker QQQ. And Webull actually has a very good interface that you can use. You can see the 1-year chart, 5-year chart. With a simple click button, you can actually buy it on your mobile phone. I've been a user of the platform, and one of the key reasons is because it's very competitive in terms of charges. And right now, Webull is actually introducing mutual funds also. Again, the charges are $0. Simply go to the mutual fund center, you'll see that there are equity funds, and you also see that there are multi-asset funds. Again, with any trade of a stock ETF or mutual fund, at the funding of $2,000, you can get for yourself $150 worth of cash vouchers. So if you haven't signed up for the platform, check out my referral links below to sign up today. With that, let's dive back to our discussion. And I have 3 constructive suggestions for you to take note, especially when you make plans and moves for 2023. The first is to buy slowly. There's this comment made by Warren Buffett previously, which is nobody wants to get rich slowly. Keep that in mind and be very patient. Yes, it is true that we will have some regrets if indeed the market has bottomed already, but it's also important to remember, investing is a marathon. It's not a sprint to put all your monies at the absolute bottom and pray that you have hit jackpot. Again, the better way is to be slow and steady and be patient. The second suggestion I have for you is to not buy the index at levels. Because when we put in levels, there's an assumption of where we think worst case scenario is. And very often in bear markets like what I mentioned, extreme pessimism can set in. It's very hard to assume where an index can fall to. Right now, the index is 11,000. Dropping to 5,500 for Nasdaq is going to get laughed at by almost everybody until it gets there. So the better method is to buy periodically. Buy it every month, buy it every quarter. Don't focus on the absolute price. Instead, focus on accumulating for yourself, especially if you are building towards retirement. And before we get to the third suggestion, again, smash the like button if you haven't done so. And that is this. Don't worry too much when there's bad news. Just like when I bought Ethereum, when FTX saga unfolded, that was in November 2022, having a contrarian approach to things will help you succeed in the markets. Yes, I did mention that capitulation may not be observed yet in the technology space. Sometimes bad news happens right at the very bottom. That's why buying an index allows you to understand that whatever you bought will not go to zero. It's a basket of companies. Price coming down is actually possibly good news if you're a long-term investor. Hopefully some of the message has resonated with you. And as always, I'd like to introduce you to my previous tutorials that can help you further in your investment journey. The first is touching on dollar cost averaging mistakes. what you need to take note of, especially if you're looking to do long-term broad-based investing. The second is what I've roughly allocated with my portfolio now of almost $800,000. If you're curious about it, follow both these tutorials because there may be nuggets of wisdom that you can take to help you better in your own journey. With that, I'll sign up from here and see you there too. Take care as always. Goodbye.